welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. We're going to be looking through some screeners today. We have our 5,000% Sezzle screener, GameStop 2.0, our Weatherford Twin, our AMR 37X opportunities, Covert 10X stocks, our ELF 2300% scanner, what it's like to buy Apple at $16, and if there's stocks that mirror the same financial data points as Apple, and so on. We have so many potential 20x stocks, etc. We're actually going to be looking at Covert 10x stocks. Now, these are stocks that are essentially priced high today, but next year are priced lower. So we can see our price to earnings. My head's kind of in the way. That's better. Price to earnings is expensive, but it's under 35. And our forward PE for next year is under 10, meaning it's really undervalued next year. Earnings per share growth next year is guiding towards positive, which is great. Quick ratio is over 0.5, so hopefully we're not going to get many companies that are over leveraged. They are profitable companies, and we're seeing volume today that is higher than normal. So that can be good if we're looking at the bigger picture and looking at a potential trough or a dip. And then our average volume is over 2 million. So we do have 15 different stocks, and I actually have them opened up right here. So we have American Eagle, Borr Drilling, Cortera, Frontline Global Payments, Herbalife, Noble Corp, Organon and Company, PEG Seguro Digital, Petróleo Brasileiro S.A. Petrobras, Permian Resources Corp, Stone Co, UGI Corp, Vodafone, and Vereen. Let's go ahead and jump to American Eagle Outfitters first. The stock is trading at $17.90. Let's see what we got going on here. So they are profitable. They do have a good forward PE. They do offer a dividend. They are doing well in terms of sales. I mean, 5.4 billion in sales. They are profitable. They do have some debt. They don't have a quick ratio over 1. However, 0.63 is not bad. Very high gross margins. Every $100 they spend, they get $135 back, which is good. A lot of shares outstanding. Let's go ahead and open up my handy dandy calculator here. This could save us some time. So market cap is 3,530,000,000. Income is 231,500,000 or 350,000. Okay, and then sales 5,400,000,000. That's incredible. And then going down to our cash and debt. Let's see. $454 million in cash. Not bad. That's the most cash they've had since pre-2017. All right, and debt 901,120,000. Okay. Just really quickly, total assets 3.8 billion, total liabilities 2.1 billion. Not bad at all, honestly. A lot of insider selling, don't really like that. Jay Schottenstein, I believe he's also the CEO for, oh, maybe he moved over to this company. He was the CEO for, I think, Digital Designer Brands, I think. I'd have to double check. Anyway, back to our calculation. Shares outstanding, 192 million and 100,000. $45 stock price, trading at $17.99. Not bad at all. They do offer a dividend. Honestly, this is not too bad. In terms of clothing, for the year, they're down 15%. They've been going down, I guess, since the beginning of the year. But they've been trading at the same level since 2018. Nope. Yep, 2018. Also 2013. 2008. So this is trading at 2008 levels. I'm not sold on a clothing store. I think if I had to pick a clothing store to check into, I'd say Urban Outfitters. Check that one out. But this, I mean, it does seem like a good value. What are institutions and hedge funds doing here? AEO. So old data says institutions own 96%. I'm going to say they own more now because we're getting like a $40 stock price. $45 stock price. It's around 20 bucks. So um, I think institutions and insiders are probably adding. So 96% was old data. New data is, drum roll, 119, all-time high institutional investor ownership right here. That is worth calling out, in my opinion. Everyone, well, Wellington added 9 million shares. Vanguard added 7%. I don't think that's 7%. From 19 million shares to 20, well, I don't know. Dimensional Fund 11 million, and then BlackRock sold actually 10%. So not a bad stock. Is this a covert 10x stock? I don't think it has the makings of a 10x stock, but it feels like a solid swing stock. We spent about 6 minutes on this one. We're going to go ahead and skip to the next one. Not bad overall, in my opinion. All right, this one's heading down, which is good. We like to see companies that are potentially undervalued. A lot of selling here. Don't like that. RSI's with the bears. Momentum is not really existent. It's trying. Money flow is heading down. Relative momentum's heading down. They're paying a really high dividend. They are profitable. Wow, they're really cheap next year. Quite a bit of debt. That might be a little concern. 41% gross margin. That's pretty good. This is amazing right here. 2023, they did 771 million. 2024, they're 968. That is humongous. They've added shares to the float. Don't like that. You can see every year they're adding more, decreasing the value of shares. But let's see down here. So they must have had a major acquisition because they are jumping like crazy. Were they profitable? Am I on the quarter? I'm on annual. Let's go to quarter. Okay. I mean, they're significantly increasing. Gross profit also significant. Uh, Net income, they're profitable. Um, EPS positive, going the right way. Gross margin 39, 42, 41, 41, 39, 37, 33, 24. Looks like the gross margins have gotten better. Let's check out that debt. They have 186 million in cash. $1.8 billion in debt. It's not good. So total liabilities went up from 182 to 355. That's about 173 million. Increase in liabilities. Assets, I don't believe assets didn't go up 170. So assets increased, but liabilities increased more. So they haven't found their secret sauce yet. Quick ratio, they're fine. They have 1.8 billion in debt. That's significant. But I mean, they look like they're doing well. Let's see what institutions are doing. BORR. I mean, this could be a 10x stock, really. It's been to $35 before, so retracing to those levels is possibility, in my opinion. What are they battling with? What's going to be their biggest hurdle? They're paying down their debts, which is good. Their biggest hurdle, that debt, that 1.8 billion in debt completely wipes out my calculation if I were to do it anyway. So I think this stock might have some more room to go down. All-time high institutional ownership, 57.9. Drew Holdings added some. Orbis investment decreased 10%. I think we actually see this potentially go down a little bit more. until they get their debt situation figured out. Also, they're paying a dividend. I don't know if they've paid one this year, but they need to put this dividend into their company and pay off that debt. So I hope they're not paying a dividend. This one's definitely a back burner. Not as enticing as American Eagle, but something to watch out for in 2025, probably mid 2025. All right, next one is Cortera Energy, $25 stock. All right, I'm hoping they offer a juicy dividend. Let's see. 3.5%, not bad. So, ooh, this one, the we can see the pain quite easily. 2023 is 5.6 billion in revenue. 2024 is 5.4. Earnings per share 2.13. So let's go down. We need to see what we got going on. EPS. Let's go to, we're on annual. Trailing 12 months. 1.66. So the EPS for 2024 is going to be even less than 2023. Revenues are not looking. I mean, this one just looks like it needs a lot more time to find itself. This one really needs to find itself. It's trading at the same levels back in 2013. Wow. So, I mean, it is kind of setting up. Let me just show you what I'm seeing. It is kind of setting up for a bullish move, but it's something we'd have to check back into Q2 2025, and I'll show you why. Well, I can tell you why is because their revenues are lackluster, to say the least. And we want to go, I guess, there. So we should see some bouncing around. It should probably come back down to 22. I mean, it's got a few months to really test. We don't want to see it bottom out. We could see a throwback where the candle comes down and we see major capitulation and then it rockets back up. So we saw that with Soundhound recently. That was a good one that we called out. Good one for Play Studios, MYPS as well, Rivian. So we want to see a capitulation event. So give this one 6 months. So we're gonna move on. Frontline, this is another oil one. Let's see what we got going on. Ooh, cup and handle potential. Ooh, wait a minute. Ooh, wait a minute. Ooh, this one has the room to retrace, which is always a wonderful thing. But we need to find an arbitrage opportunity where we can see if this company's really killing it and the market's getting this one wrong. Ooh, okay, just off the bat, 2023 they did 1.79 billion, 2024 2.04 billion. That's almost a $300 million plus difference, like positively. Our EPS here for 2023 is 2.95, 2024 2.46. EPS is going down. However, they still have one more quarter to report. I feel confident. I feel very confident. I'm feeling very good about this one. Very cheap. Their dividend is way too high. Why? Is this real? Ooh, it's... Okay. So Thinkorswim is not working at the moment. Unfortunately, that sucks. Let's just see if they issued a dividend. 5 under the radar. I don't think they did. I don't think they're doing a dividend. I don't think they did a dividend. I think this might be older data. But again, they're doing a dividend right here. So I don't know what to expect here. Okay, so they're doing great on sales. This dividend business is goofy. Thinkorswim is not working. So we'll come back to that. I mean, this looks really good. Let's run our calculation on this. Whoops. Okay, market cap is 3 billion, 300 million. Income is 547 million, 220,000. Good for them. Sales 2 billion, 40 million. Cash, let's go down and check it out. Quarterly balance 326. Debt 3 billion 387,430,000. Ouch, that's rough. Okay. Total assets 6.2 billion, total liabilities 3.9. So assets decreased 170 million, liabilities decreased about good, even more. No, even less. Never mind. So they haven't figured out that secret sauce yet. No real red flags at the moment. I don't like their debt situation. However, it looks like they made probably an acquisition or something. And they are paying it off very slowly, which is fine compared to quarter over quarter. Let's go back to our calculation. Yeah, this one might be a doozy. 222,620,000. $12 stock trading at $15, and they give 12% of their cash away, which I don't think they should. They need to be paying off that debt. I like this one as a definite potential 10 bagger. I mean, if you bought this and I mean it is shaping out to be a cup and handle for sure. It needs a little bit more time. Come down to 13, maybe comes down to like 13, yeah. But gosh, if you bought this in 2022 or even 2018, we could see an amazing run from this one in the next few months. So FRO, let's just see what institutions are doing. Do they see what we see? I mean, the stock is barely undervalued, but they are ramping up like crazy. I mean, they did 2022 to 2023 about 370 million. Now 2023, 2024 probably around 300 million plus again. EPS hopefully will grow and beat 2023. Not a bad situation. So institutions on 25%. We want to see more than 25% here. 24. So institutions actually sold a little bit here. So this is a probably wait till next year type situation. No real major exciting stocks at the moment, covert stocks. Now this one, this looks like it's been consolidating for 2 years now. That's really good. And it's trading at the same levels as it was in 2018. August 2018. Has the company done better since 2018? Oh, hell yeah. They've like doubled for sure. Wow. Okay. This one looks like very promising. Okay. I'm very, 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 very excited for this. Many reasons. This is going down. This is huge. We see natural and organic accumulation of the shares. Chef's kiss. Sales just trucking upwards. 2023, 9.6 billion. 2024, we're at 10 billion flat. Beautiful. EPS 2023 is 3.77. Trailing 12 months, 5.3. Where they are crushing it. They are absolutely crushing this. We're going to run our numbers on this one. Okay, 30 billion, 500 million. Good for them. Income, they're profitable, 1 billion, 360 million. Sales, they do 10 billion, 20 million. Insane, 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 insane. Okay. They look pretty healthy from what I can see. Quarterly balance sheet. They probably got billions in cash. Yep. 3 billion. That's the most cash they've had on hand since at least 2022. 3,139,510,000. Wow. Debt probably not too bad. 15 billion? Let me believe this. 15 billion, 215 million, 850,000. That's a punch in the gut. It's going down. I mean, they're going down. Total assets 49.8 billion, total liabilities 26.3 billion. That is beautiful. Whoever is running this balance sheet, they're doing a good, dang good job. Really. I just want to go back here really quick. I want to see their margins. 63%, 63, 61, 62, 63, 61, 58, 58. Looks like they've steadily grown their margins. Good for them. Okay, we're going to go ahead and finish our calculation. 254,400,000. This is a $117 stock trading at $117. Damn, I was hoping to be more excited. That's a bummer. So, I mean, if they continue what they're doing now to next year, they are doubly undervalued. This is something you need to put on the map. We're going to see what institutions are doing. I guarantee you institutions and hedge funds are buying this one at the moment, for sure. Low dividend, we like to see that. That is good. Not giving too much of their cash away. They definitely need to put some of that cash towards their debt. I don't see any red flags here. Sales and EPS past 5 years are positive, so they're resilient through COVID. I mean, this is just a gorgeous, gorgeous stock. So 91.5 is old data ownership. New data is 105, easy. So we can see the trend institutions and hedge funds are adding. Vanguard decreased 5%, Wellington decreased 47%, BlackRock decreased 11%. So take with that what you will. I think this is an absolutely beautiful stock to start accumulating. My only regret is I didn't get in at 92. So what we want to see is obviously we want to see it break this 50 SMA on the monthly chart, which is huge. You can see when the stock gets above this SMA, it just doesn't stop. So this is something I would consider getting into early 2024 for my Robinhood trading account, because this, I mean, relative momentum's heading up, money flow's heading up, strength is slowly heading up. So look how many months or years, look how many years it stayed hot. Like this is going to be a good stock. Yes, I feel like I've had a really good one. So we'll just keep that one on the background so everybody can see it. Herbalife. Let's see what we got. Ooh. All right. 2023 they did 5 billion, 2024 5 billion. I mean, they have not been doing too hot. EPS is 1.42 in 2023. 1.42. Oh, they are way off the mark. Trailing 12 months are at 0.85. This is not good. It is very undervalued, but their business looks like they're hurting bad, unfortunately. Really good gross margins. EPS over the past 5 years, not good. Sales 1% over the past 5 years. Oof, they're almost over leveraged. Let's look at that debt really quick. That looks scary. Debt is 2.4 billion. Exactly what we were looking to see, unfortunately. Total assets 2.8 billion. Total liabilities 3.8 billion. Go and do a quick Google search on what happens when liabilities exceed assets, and you've answered why we're passing on this one. All right, another gas company. These gas ones can really take off, by the way. Ooh, okay, so it ran from $20 to 55, and now it's down to 31. Let's see what we got. 2023, 2.59 billion. 2024, 2.7. Great dividend here, 5%. Love that. Um, I okay, so the price earnings is a 9, forward price earnings is 9.82. So if the stock does what they did this year to next year, they're actually going to be a little like a smidge more overvalued. I mean, overall still undervalued, but just looking year over year, not very, this is kind of not enticing at all, but they also could be guiding very low on purpose. Um, So we're just going to go ahead and rely on our calculator here because this will be our source. This is our source of truth and doesn't really do me wrong. So 4,890,000,000. They are profitable 501,000,000, 400,000,000, 400,000, sorry. 2,770,000,000. Okay, I don't really see any red flags, which is kind of interesting because it's a I mean, it's $30. It's not an $8 stock. So let's go on. EPS this year, they're killing it. Okay, they're gonna be good. They're gonna be good. They're beating the EPS dilute and EPS basic are beating, but the EPS recurring, um, we'll see what happens. They still have one more quarter to report, so this is a very good sign. Let's go ahead and pull you up. Okay, they have cash. Let's go here. Okay, cash is 405,060,000. Debt 1,981,240,000. Wow, that's a lot. Total assets 8 billion, total liabilities 3.3 billion. Not bad at all. We got some insider buying. We like this. We like this a lot. Wow, these are huge, huge buys. These are huge, multi $34 million at $34 a share. Wow. I would feel honored to pick some of this up if it is undervalued. Shares outstanding 160,340,000. $41 stock trading at 31, not bad, honestly. And I think they are guiding lower on purpose because if you aim low but shoot, if you aim low in terms of goals and you beat it, it's going to look really good. So I like this one. I would wait for $30, 28. I mean, honestly, I would potentially consider taking a position here at these levels. Me personally, only because we saw it. So it could be making an Ellie wave. We saw it run over 100%, then it decreased. It almost fell 50%, almost. Almost. So I think coming down here, it would be a fine add. And then just dollar cost averaging, maybe like $30 every month or so. It really just depends on your strategy. I like that they pay 5% dividends. They have their high gross margin earner. They're profitable. I like that. They've added shares to the float, which is okay, but I think it's worth potentially just taking nibbles, but it's not my favorite. It's not as good as GPN, so we'll pass on it, but it's still a decent stock in my opinion. Okay. Organon. Wow. You know what? We're going to save this one for part 2 that comes out in a couple days. So thank you guys for watching. We're at 30 minutes. That's quite a long video. We'll look at OGN, PAGS, PBR, PR, STNE, UGI, VOD, and VRN on the next video. Thank you so much for watching. Take care. We'll pick this up soon. Thanks.